everybody. You're watching Street Smart. I'm Carol Massar. I'm here live from the MIT Sloan CFO Summit, where earlier I sat down with the CFO of Qwest Communications, Joe Euteneuer. He told me what the company has done to really dial down their losses during the economic downturn.
Oh, it's come dramatically. I mean, we've now literally gotten our loss of revenue down to low single digits to where we're actually thinking about where the inflection point is. We've taken some $3.5 billion of debt out of our capital structure to where we just got an investment grade rating after being high yield for this period of time. And the stability of our free cash flow and our EBITDA over these past few years to maintain that in the midst of the declines we had was just phenomenal execution on the operations team part.
Not easy to do during the last couple of years to get to that point.
Not easy at all. It really took a lot of defining the plans, making sure they were clear to the workforce, and focusing on that consistent execution. And consistency was so important into achieving the goals.
Joe, you guys, though, are still kind of a company in transition because you were acquired by CenturyLink earlier this year. Talk to me about the process of getting that deal approved. Where are we in that process?
So right now we have the unions done, we have the CLECs done, we have all but 9 states. So we're down to 9 states left in the FCC. So we're pretty close. It's gone a lot faster than we thought. I think the last scheduled hearing is beginning of January. We still anticipate closing, in the first half of the year, and could be earlier, subject to how fast things continue to go.
Any concerns that you're hearing from regulators at this point?
No, I think the regulators are really looking for consistency of performance. So, we've done a good job of continuing to deploy fiber, and we will continue to do that because it is critical to our business to focus on the continued growth of strategic products versus our old legacy products. So we need to transition to the strategic side.
Something I want to ask you is you guys actually tried to sell your long-distance business before that CenturyLink deal was announced. I mean, when did Qwest kind of first consider a takeover?
So I think what really happened was we had some reverse inquiries interested in the long-distance business. So as a result of good corporate governance, we said we needed to entertain those inquiries. And when we went through that process, we realized that that wasn't the best thing for our shareholders. In looking out at the landscape of the telecom market, we really believe that consolidation is something that needed to happen in this marketplace, similar to what happened in cable TV, the consolidation of cable TV. And so in thinking about what we needed to do, we wanted to make sure that the transaction we completed gave the new entity a big enough size that it didn't need to do anything else, but it gave it the flexibility to do whatever it wanted strategically. And that's what I think this merger accomplished.
Were there other companies interested? Or did you talk to other parties?
I mean, you can read the proxy about the sort of the process we went through. But I think when you look at the cultural fit, the size of the two companies, the direction of the two companies, this was really a good transaction to happen. And good leadership on both sides.
So what's next for you once this deal gets approved? As you know, everybody kind of wants to know what happens next. You've got a great reputation in talking to a lot of folks, which is a nice thing in this industry. I know you're focusing on the merger at this point, but then what for you?
So I think, look, I've been very fortunate to have a number of people talk to me, and I feel very, very good about that. But for right now, I'm focused on getting this deal closed, and then post that, I'll get that decision out there. But a good question.
All right, Julian, I want to point out what's interesting about Joe is he started his job at Qwest on the same day that Lehman filed for bankruptcy, so it was really rough timing. And he talked about earlier with me about how tough it was to access capital at that time. We know it was. And he actually went to the CEO and said it would be easier to get every employee to basically charge $1,400 on their credit card rather than access the capital market. So it was some interesting perspective on how tough those times were.
Well, it's a good thing they didn't have to finance the acquisition that way. For everybody charging up their credit card.